So here's the topic that I'm going to piss a lot of people off: the old stock versus real estate. Which one is a better investment? I will clearly state my opinion on this and listen to the whole thing. And those are my reasons. And then you can have a think about it, or you can say I'm an idiot. Or you could just say I'm an idiot right now. I get that a lot. Okay, stock versus real estate. Number one, my opinion is real estate's better. And here are my reasons. The number one thing for me is with real estate, you have control. You can improve your property and it can go up in value. I can't improve a stock. I have no control over a stock unless I am a multimillionaire, billionaire, and I buy so many shares in a stock that I'm on the board and I can control the CEO or wherever this company is going. For the average person, you're not going to get on the board. You're going to buy a couple hundred stocks or a couple thousand stocks, and you have zero control. That stock will go up and down based on nothing you do. So that's my number one reason why I prefer real estate. I could paint a house, I could add something on, I could do a renovation, I can, add value. I could put in anything that's going to add value. Another bathroom, update the kitchen, put in hardwood instead of carpet. I can add value to a piece of real estate. You can't do that to a stock. Try it. Warren Buffett can. Maybe Elon Musk, but not a whole lot of people can do it. My second reason is if you want to buy $100 worth of stock, you need $100. Of course, yeah, you can do stuff like margin, and you can get a loan, and you can get some of that stock. Sure, yeah, but overall, the way that people buy houses traditionally has always been you put down a deposit, and then the bank gives you the rest, or you get private lending or wherever the hell. So you put down 20%, and traditionally everybody's used to giving money out as a loan in the form of a mortgage for a house. So you're leveraging that 20% to get you a house, a house that's $1 million. You put down 200,000, the bank's going to give you 800,000. You want to get $1 million worth of stock, you can put down a little bit and then do a margin call, and then you can borrow some, but you're still borrowing at a really high interest rate, and not a lot of banks are going to do it. Okay, so that's the number two reason. The number three reason is it's the shady part of the stock market that I can't stand. And if you ever hear about all these stocks that are going up like crazy, there's a lot of scamming in the stock market. Look at, the most recent one with GameStop. There's actually, there's a show about this guy that artificially raised the price of GameStop. And all these big companies got into it, and then it crashed. They artificially raised the price. And this happens, this is the one that they put on TV. They made a movie out of it. But this has been happening for decades. I've heard stories, countless stories of, oh, I got a tip from this broker. He says, you got to get this stock. And then somebody says that to somebody else. And then all these brokers are doing is, one, churning, because they get a commission every time they get somebody to buy that stock and you buy it through them. And two, they pump and dump this stuff as they see the word gets around and all these people start buying it and the stock goes up and up and up. They go, okay, we've gotten it as high as we can get it, guys. Shh, backroom talk. Shh, yeah, okay. We got all these suckers. They raised the price. And now we have all these stock and it's gone up. Let's dump it now and take our profit. And all these suckers are left wondering why it went down. And then all these suckers are going to hold on to the stock hoping that they can get their money back. That's super slimy, but it happens all the time. With a house, the house value is based on the current value of the houses all around. You cannot artificially increase the value of a house. It can't just, the average price, if it goes up 5% a year, it goes up 5% a year, like the average of all the houses around it. If you do nothing to the house, it'll go up 5%, around 5% is the average. If you buy it under market value, you've already made money. But then if you add a new kitchen, put in a new bathroom, add a floor, do the basement, you've increased the value, really increased it. It's not artificial. And now you've got a house that's going to compete with all the nice houses in the neighborhood and probably do even better. It's impossible to artificially increase the value of a house. Now, someone's going to say, well, what about the bubble of Toronto real estate? They've been talking about the fucking bubble of Toronto real estate for 20 years since I've been in the business. Hasn't popped. So, yeah, that's my other reason. The whole pump and dump thing that these traders do, it's slimy. And think about it. In the world of the stock market, who's making all the money? It's all those brokerages. All they want to do is churn stuff because they make a commission. They don't give a shit about the stock, the value, and what you're putting into it. They just know they get a commission all the time. And now there's online brokerages and it's less fees and this, that, and the other thing. But it's like one of the biggest scams going. It's gambling. So I know people that are fully into the stock market. They say, well, being a real estate agent is a lot of work. And not having done it for 20 years, I don't think so. It's not. The fifth reason, am I on the fifth reason? At the end of the day, you can't live in a stock. Dog. Hold on. At the end of okay. If something happens with the house that you bought and you're renting out, you can actually live in the house. You know, unless you really bought it badly and you didn't use some common sense and you chose badly, which is on you because there's enough information out there right now to figure out how to buy properly. And if you're not getting it rented out, then you just have to put some money into it and pay the mortgage and pay the bills. And that's not going to be forever. Worst case scenario, you go live in the house. Or you find somebody else that's going to live in the house and you're going to pay less. With a stock, if it goes down and it starts plummeting, there's nothing you can do other than sell it. You can't live in a stock. Sure. Like it's not as good as real estate. And people say, well, with stocks, you can also diversify. You can buy different kinds of stock in different industries to protect yourself, depending on what industry goes up and down, etc. Yeah, you can. You can also do that in real estate. There's different ways to invest in real estate. You can invest, simplest way is buy a house, live in it, rent out a floor. That's the easiest number one way to invest in real estate. The second level is you buy another house and you rent out the whole house. Maybe it's got a bunch of units. The other way is you get into Airbnb short term, you buy it out and you're renting out short term and you're making money that way. The other way is you can buy land and you can hold on to it, wait for it to go up in value and sell it. Or you can buy land and build on it and portion it off and sell it. You could buy storage units. You know, storage is getting bigger and bigger and bigger. Look at Donald Trump. He's storing stuff in his bathroom. The other way is you could buy multifamily, which is apartment buildings. And that's a whole other world of commercial lending, and that's a different video, which I've probably got on my YouTube channel. So yeah. So and the other thing about stocks is, the thing that bothers me about stocks is really, the people that make real money in the stock market, and think about this. And this is 1,000% true. The people that make real money are the people that have a ton of money. So let me explain. If you've got a ton of money, you can go buy 1,000, 2,000, 10,000 Rogers stock or whatever, AT&T, or you got a ton of money. Now what happens is when you buy a whole bunch of stock with a ton of money, that stock doesn't have to move very far up for you to make money, right? If you got 100,000 shares of whatever fancy stock it is, blue chip or whatever, if it goes up $1, you've made $100,000. You made $100,000 if it just goes up $1. If it goes up 50 cents, you've made $50,000 on 100,000 shares, right? Wait a minute, is that right? 100,000 shares at $1. Yeah, I think so. My math could be wrong. Regardless, the point is, stocks are really, really fantastic for people that have a ton of money, and it just has to move a little bit up for them to make a lot of money. The average person that's investing in stock and holding it for a while, they don't have a ton of money. That's why they have to hold it for a long time. They got to hope that it goes up and they hold on to it, and after 20, 30 years, they're going to make return. But that's not even including, if they have it in a mutual fund, what they're going to pay in fees, right? So that's one of my big things about the stock market is like, yeah, everyone can talk about, Berkshire Hathaway and, Warren Buffett and all these guys making a ton of money because they got a lot of money to buy a lot of stock. Now, if you buy a house, it's going to go up 5%. You hold it, it's going to go up. You could cash flow on a house. Sure, you could get stocks that have dividends. Yeah, but you have to also buy a ton of them for those dividends to pay you enough to help you have some cash flow. Like it would cost, if I wanted $10,000 in cash flow a month, I would have to spend roughly $2 million on like a stock like I think Enbridge, where it pays dividends every quarter. So for me to get $10,000 a month, I need 1.5 million, around that, 1.5 million in Enbridge stock to get $10,000 a month. My numbers could be a little bit off, but that's how you can get cash flow from a stock, and you're still holding the stock, but you're getting dividends. With a rental property, once you take care of your expenses, you're making the difference. That's cash flow. And, if you've got 10 properties, then if you're making $1,000 on each property, that's $10,000 a month, and you're still holding equity that's going up in value. And to get those 10 properties, you might have to only spend, deposits. Like you might only have to spend depending on the house and price, like if it's $20,000 a house or $50,000 a house, 50,000 times 10, that's 500,000, right? So, no, 50,000 times 10, that's 50,000. Sorry, I keep mixing up my numbers, but the numbers are true. I don't have them written out, but I've been doing this a while, quite honestly, and I've been looking hard at why I wouldn't invest in stock. And to be honest, or to be totally transparent, my wife and I had RSPs. We had about $300,000 worth of RSPs 20 years ago, and we saw the beginning of the real estate investment way and the money we could make. We cashed out all of our RSPs. Don't regret it for a second. And along the way, every 5 years or 8, 10 years, when the market takes a dip, I get calls from friends. Yeah, hey man, tell me some more about this real estate and landlording and tenants, because I'm taking a bath in the market. I never get calls from other real estate investors that I know that are worried about any downturn in the market, in the real estate market. They look at a downturn in the real estate market as an opportunity. Everyone I know that calls me during a downturn in the stock market is asking me, hey, how do I get into rentals? So, stock market in my book sucks. Everybody says, yeah, diversify. I'm not going to diversify with the stock market. I'm going to diversify with my real estate holdings because I have a lot more faith in real estate than I do in the stock market. To all the people that have built up fantastic portfolios with the stock market, I applaud you. And I think that's great. And I don't want to, make you feel bad that you got stock, but it's just my opinion. That's all I got. How many viewers do you think I'm going to lose for this? Can't wait for the comments. Bring them on. Thank you. Bye.